Hi, we will be solving another complete comprehensive example, but this one with adjustment of capital. Now when a sum is with adjustment of capital, the steps to be taken are slightly different from the usual sum which we do under the complete comprehensive example. Before we go further into the first sum, we'll see the steps which have to be taken to solve this adjustment of capital sums. So let's go to those steps first. First, let us learn how to identify an adjustment of capital sum in this chapter of change in profit sharing ratio amongst the existing partners. It will be mentioned in the question that the partners decide that their capitals should be adjusted in new profit sharing ratio between them. So it will be mentioned in the question that the partners have decided to adjust their capitals according to the new profit sharing ratio. Then we know that it is an adjustment of capital sum. Next, what are the steps to be taken to solve an adjustment of capital sum? So let's go into that. What are the steps to solve sum where adjustment of capital of partners is required? The first step is to make all adjustments to the partners' capital accounts, including the treatment for evaluation of assets and reassessment of liabilities, accounting treatment for existing goodwill and the fresh valuation of goodwill, accounting treatment for reserves, accumulated profits and losses, and also fictitious assets, treatment of expenses on reconstitution of firm, if any, and any other treatment that is specific to the particular sum. Now this is step 1. That is to make all adjustments to the partners' capital accounts. The next step, step 2, is after making these adjustments, we need to calculate the balance carried down of each partner. Now this is referred to as adjusted capitals of the partners. That is the capitals of the partners after all adjustments have been made. But please do not write this answer down as balance carried down. You can write it in your working notes. The adjusted capital of each partner, that is the capital of the partners after all adjustments have been made. The third step is to add up the adjusted capitals of all the partners and divide this in the new profit sharing ratio between the partners to get the new capital of each partner. The final step is to compare this new capital, which is calculated as per step 3, with the adjusted capital for each partner, which is calculated as per step 2. Now in case the new capital is greater than the adjusted capital, we need to pass the journal entry as follows for the amount equal to the difference. Bank account or partner's current account debit to partner's capital account, being cash brought in by partner or adjustment made through partner's current accounts. So the question will say whether the adjustment has to be in cash, in which case we will debit the bank account, or if the question says that the adjustment needs to be made through the partner's current account, then we will debit the particular partner's current account. Where the adjusted capital is greater than the new capital, then the following journal entry needs to be passed for the amount equal to the difference. We need to debit the partner's capital account and credit the bank account or the partner's current account, being cash withdrawn by partner or adjustment made through current accounts. So we'll have to check again in the question whether we are asked to make the adjustments through cash or through partner's current accounts. And if it's through cash, we will credit bank account, and if it's through the partner's current account, we will credit the partner's current account. So these are the 4 steps which have to be followed to solve a sum where adjustment of capital of partners is required. So let's go and see how to apply it by solving the first example under this topic. Example sum 1. Ram, Mohan, Sohan and Hari were partners in a firm sharing profits in the ratio of 4:3:2:1. On 1st April 2019, the balance sheet was as follows. To the left of the screen, the balance sheet of Ram, Mohan, Sohan and Hari is given, and on the right, additional information is given. From the above date, the partners decided to share the future profits in the ratio of 1:2:3:4. For this purpose, the goodwill of the firm was valued at Rupees 1,80,000. The partners also agreed for the following. A. The claim for workmen compensation has been estimated at Rupees 1,50,000. And B. Adjust the capitals of the partners according to the new profit sharing ratio by opening partners' current accounts. We are asked to prepare the revaluation account, the partner's capital account, and the balance sheet of the new firm. Now the point B over here, which says that adjust the capitals of the partners according to the new profit sharing ratio by opening partners' current accounts. This tells us that it's an adjustment of capital sum because the capitals of the partners need to be adjusted in their new profit sharing ratio. And the adjustment has to be made by opening partners' current accounts and not through bank account. So we need to make the adjustments by opening partners' current accounts. We'll begin with the revaluation account. Solution. Revaluation account. Left side debit, right side credit. Particulars. Rupees. Particulars. Rupees. Now the point A, which says that the claim for workmen compensation is estimated as Rupees 1,50,000. Though the claim is 1,50,000, we have a reserve of only 1,20,000. So there's a shortfall in the reserve. So we need to debit the revaluation account for the 30,000 shortfall to workmen compensation claim account 30,000. There are no other adjustments to be made, so we balance the revaluation account. We are left with the loss on revaluation. By loss transferred to partners' capital accounts. Ram, Mohan, Sohan and Hari. Total loss 30,000. 30,000 loss to be divided in old profit sharing ratio 4:3:2:1. So Ram gets 12,000, 9,000 against Mohan, 6,000 against Sohan, and 3,000 against Hari. So we've prepared the revaluation account. Let's go down further to prepare the partner's capital account. Partners capital accounts. Left side debit, right side credit. We have the particulars column. Column for Ram, column for Mohan, column for Sohan, and a column for Hari. Similarly, on the other side, we have a column for particulars, a column for Ram, a column for Mohan, a column for Sohan, and a column for Hari. Let's bring down the balance of the capitals first. By balance brought down. 4 lakh against Ram, 4,50,000 against Mohan, 2,50,000 against Sohan, and rupees 2 lakh under Hari. Let's see the revaluation loss to revaluation account. $12,000 loss for Ram, 9,000 for Mohan, 6,000 for Sohan, and 3,000 for Hari. We've transferred the loss on revaluation. Next, we need to deal with goodwill. So let's go down to the working note to calculate the gain and sacrifice of each partner. The working notes at the bottom. Working note 1, calculation of gain or sacrifice of each partner. The OPSR is 4:3:2:1 and the NPSR is 1:2:3:4. Therefore, for Ram, old share 4/10 minus the new share 1/10, positive 3/10, sacrificed by Ram. For Mohan, old share 3/10 minus the new share 2/10, positive 1/10. It's a sacrifice by Mohan also. For Sohan, 2/10 old share minus 3/10 new share, negative 1/10 gain by Sohan. And for Hari, old share 1/10 minus new share 4/10, negative 3/10. Hari also has gained. Second one, working note, journal entry for goodwill. So we need to debit the gaining partners and credit the sacrificing partners. So let's do that. The gaining partner, Sohan capital account, Hari capital account, both of them debited. To Ram capital account, to Mohan capital account. Again Sohan, goodwill of the firm rupees 1,80,000 into gain of Sohan 1 by 10, 18,000 rupees. Against Hari, it's 1,80,000 into 3 by 10, 54,000 rupees. Against Ram, it's 1,80,000 rupees into his sacrifice 3 by 10, 54,000 rupees. And against Mohan, 1,80,000 into his sacrifice 1 by 10, which is 18,000 rupees. So let's enter these figures, that is post these figures in the partners' capital accounts. So we have the partners' capital accounts on top half of the screen. We need to debit Sohan and Hari's capital account. So it's to Ram capital account and Mohan capital account. Sohan needs to be debited with 18,000 rupees and Hari needs to be debited with 54,000 rupees. And on the other side, by Sohan capital and Hari capital account. We need to credit Ram's capital account with 54,000 rupees and credit Mohan with 18,000 rupees. So let's go back to get the partner's capital account. So we've dealt with point A, the reserve workman compensation, and we've done treatment of goodwill also. Now we need to do adjustment of capital. So let's do that. I'll keep the partner's capital account on the first half of the screen and the working notes the second half of the screen. So after the working note that we did for goodwill valuation, the third working note, calculation of adjusted capitals of partners for Ram, total 4,54,000 credit side minus 12,000 is rupees 4,42,000. Next for Mohan, total of the credit side 4,68,000 rupees minus total of the debit side 9,000 rupees is 4,59,000 rupees. For Sohan, credit side total 2,50,000 rupees minus the debit side total 24,000 rupees 2,26,000 For Hari, 2 lakh minus total of the debit side 57,000 rupees is rupees 1 lakh 43,000 rupees. So let's get the total. $12,70,000. The next step is to calculate the new capitals. Calculation of new capitals. The new profit sharing ratio is 1:2:3:4. So for Ram, the new capital is the total of the adjusted capitals 12,70,000 rupees into 1 divided by 10, which is 1,27,000 rupees. Next, for Mohan, 12,70,000 rupees into 2 divided by 10. Rupees 2,54,000 rupees. For Sohan, 12,70,000 rupees into 3 divided by 10. ₹3,81,000 rupees. And for Hari, 12,70,000 rupees into 4 divided by 10. Which is rupees 5,08,000. The next working note 5, comparing the adjusted capital with new capitals. Adjusted capitals and their new capitals. I'll scroll down the top screen to get the adjusted capitals for each of them. Ram, adjusted capital 4,42,000. Mohan, 4,59,000 rupees. Sohan, 2,26,000 rupees. And for Hari, it's 1,43,000 rupees. We'll scroll down further to get the new capitals. For Ram, 1,27,000. For Mohan, it's 2,54,000 rupees. For Sohan, 3,81,000 rupees. And for Hari, it's 5,08,000 rupees. So we decide whether we are going to debit or credit the current account of the partners. As far as Ram is concerned, the adjusted capital is greater than the new capital. So we need to credit his current account with the difference. $3,15,000 is the difference. For Mohan, we need to credit the current account again. With 2,05,000. For Sohan, we need to debit the current account because the adjusted capital is less than the new capital. And we need to debit the current account with 1,55,000. And for Hari also, we need to debit the current account with 3,65,000. So let's enter these figures in the partners' capital accounts. So partners' current account. We need to credit the current account and debit the capital account in the case of Ram and Mohan. So it's 3,15,000 and 2,05,000. And by partners current account, we need to credit the capital account and debit the current account. In the case of Sohan, 1,55,000 and Hari, 3,65,000. Let's enter the new capitals of the partners as balance carried down. 1,27,000 rupees, 2,54,000, 3,81,000 rupees, 5,08,000 rupees. Now if both sides tally, then we know that our arithmetic is right. So let's check out whether the two sides, the debit side and the credit side for all the partners are tallying. So these are the totals for the debit sides. So both the sides are tallying. So we know that our arithmetic is right. So let's prepare the balance sheet of the firm. Balance sheet as at 1st April 2019. We have the liability side and the assets side. We'll finish the balances of partners' capital and current accounts first. Capital accounts. Ram, 1,27,000. Capital account balance. Mohan, 2,54,000. Sohan, 3,81,000 and Hari, 5,08,000. we'll insert the current accounts of the partners. The current accounts having a credit balance are Ram's and Mohan's. So Ram's current account is 3,15,000 and Mohan 2,05,000. The total of this we know will be 12,70,000. The current accounts having a debit balance, that is Sohan's and Hari's. So Sohan's current account is 1,55,000 and Hari's current account is 3,65,000. So let's go back to the balance sheet question to find out if we've missed anything. There's a workman compensation claim. The claim is 1,50,000 rupees. There is no change in the fixed assets, which is 9 lakh, and there is no change in the current assets also, which is 5,20,000. So let's check if the balance sheet is tallying. $19,40,000 on the liabilities side, and $19,40,000 on the assets side. I'll remove the split and we can view the ledger accounts and the balance sheet. So this was the question. This is the revaluation account. There was a loss of 30,000 which we transferred in old profit sharing ratio. Next, we prepared the partners' capital accounts. We had to adjust the capitals as per the new profit sharing ratio. The working notes are at the end of the sum. This is the balance sheet prepared by us. And these are the working notes. The first one was to calculate the gain and sacrifice of each partner. The second working note was for journal entry for goodwill. The third working note was calculation of adjusted capitals of the partners. The fourth working note was calculation of new capitals of partners. And the final working note was comparing the adjusted capital with the new capital to find out whether we need to debit the partner's current account or credit the partner's current account. Please remember, since we have opened partner's current account, the same should be shown in the balance sheet. So for Ram and Mohan, for whom we had credited their partner's capital account, partner's current account, they will appear in the liability side of the balance sheet, because all liabilities have credit balance. And for Sohan and Hari, since we debited their current account, their current accounts that we opened will appear on the asset side of the balance sheet, because all assets have debit balance. In the upcoming video, we will see an example 2 in the same complete comprehensive example involving adjustment of capital.